How can you make sure you maximize your charitable contributions? Let's take a look. Now, this is just a quick mapping to understand that really the most efficient way to deduct charitable contributions is to make them as an individual. Don't do them through a business. Now, if you tried through a sole proprietorship, which is on your Schedule C of your 1040, that's actually not allowed at all. You can't make that deduction. You have to go through your Schedule A itemized deductions. It wants you to run through that pool of costs. If you deduct it through an S corporate partnership, you can do that, but that deduction is going to get split between the owners and or partners in allotment with their ownership percentage. Meaning if you contribute $10,000 and that gets split between the partners, that's not really an efficient way to be deducting your own charitable contributions, right? Now, there is a way to do it through a C Corp, but that's much less common. What we're focusing on here is that as an individual, you should be just going through your Schedule A, not worried about trying to deduct this through a business. Now, of course, what are we really talking about here? How is this actually working? If you need to get under the hood and check this stuff out, see if you're actually taking charitable contributions in prior years, we want to be able to do that. That's what we're taking a look at right now. If we flip over here, this is our Schedule A. This is where these itemized deductions occur. You can see down here, if we scroll down, gifts to charity. This, again, if we do, whether we do this directly or we do that pass-through where it gets divided among the partners, this is where that deduction is going to add up, and it's going into this pool of costs one way or another. Don't be the goof who thinks you're getting that deduction through your business. It's not going to work that way, or it's going to work much less efficiently than you want it to. You're not going to get the full deduction. And ultimately, we see how that works here. Let's say we're in close to the standard deduction. We get those charitable contributions, but we did it through our business and divided 3 ways among our partners. You can see how this pool of costs may not rise to that point where we get past the standard deduction. That's the whole point of these itemized deductions. If we're not getting past the standard deduction, it doesn't even matter. If those gifts to charity are not working in a manner where it's making this whole picture work, they're going to get lost. You're going to think you're getting that deduction, and it's not going to be happening. You have to make sure that all the costs in the itemized deduction add up to an amount that surpasses that standard deduction. If it's not, you need to reevaluate what's going on. Hey guys, I'm throwing in one extra part after I've made this video. If you have deducted charitable contributions in the past, here's a quick check you can have to see if you've been deducting them on prior year tax returns. If you come to your 1040 on any given year, they're going to look a little different depending on what year you're in, but if you scroll through and you're going to come down, you're going to find this line right here, standard deduction or itemized deductions. Now what you have to do is look up what the standard deduction was in any given year. If that number falls on this line right here, this is the number for 2025 for a married couple. If that number is a standard deduction, you did not take itemized deductions, which means you shouldn't have taken any charitable contributions either. If instead that number is higher than the standard deduction for any given year, you did get itemized deductions, and if you had charitable contributions included in that, they were deducted for that year. So just another quick way you can check if you're into checking this stuff on your own. It's easy to get lost in the sauce on this stuff, but remember with the charitable contributions specifically, think twice before you go through your business. Deduct them individually. Most likely that's going to be the most beneficial way for you to go about it. Check your forms from prior years. If you're worried about this case, make sure you're getting those charitable contributions you're making. Make sure it's working within your tax strategy. My name is Matt Speckman. This video is Don't Make This Mistake. As always, thanks for coming. See you next time.